Hey, this is Adam Torres, and I'm here to tell you that it has never been easier to start your very own podcast. At Mission Matters, our goal is to amplify stories that matter. That means we want to help you start your podcast because your story matters. We can do this in 3 different ways. 1, join our podcast school and take a free or paid course. 2, visit our resources page where we've already figured out what you need, such as where to host your podcast. Or 3, heck, we can even do everything for you through our podcast agency, including editing for cheaper than you can do in-house. Oh, and no contract, service is month to month. Get started by heading over to missionmatters.com and click on Start a Podcast. All right, now let's get into the show. Hey, I'd like to welcome you to another episode of the Mission Matters Money Podcast, your source for all things money. My name is Adam Torres. You can follow me on Instagram at AskAdamTorres. Keep up with my book releases, book tour schedule, signings, all that other good stuff. Always love to connect with you there. And as always, if you'd like to apply to become a co-author of one of my upcoming books, just head on over to the website, missionmatters.com, and click on Become an Author to apply. All right, so today I have Rohun Jauhar on the line. He's co-founder and managing partner over at JT Capital. Rohun, welcome to the show.
Hey, thank you for having me. I appreciate it.
All right, so excited to get into today's topic. So we're going to talk about multifamily real estate investing, which I know you're doing over at JT Capital. But before we do that, let's go a little bit further in your background. So how did you get started in your career and in business?
Yeah, absolutely. So it's funny, I tell people I actually started my real estate career when I was about 7 years old. My dad owned single-family houses in Detroit. And we lived in a small town in a suburb in Michigan. And so I would kind of accompany him every weekend to all of these houses and help him fix things up and everything like that. But, as I grew up in Michigan, I ended up going to Michigan State University.
Sparty on, hold on. I need a Sparty on there. Come on now, for all the Spartans out there, go ahead. I have to throw it out there. I love it. Go white. I love having Spartans on here. All right, continue. That was rude. Go ahead though.
Yeah, absolutely. So, I had a great time going to Michigan State. I majored in finance, and ultimately I got a job at GE. Growing up in Michigan, for someone like me, that was a huge, huge opportunity because I was just a small-town kid that thought I would pretty much work in Michigan my whole entire life, within the auto industry. So from there, I had an itch for entrepreneurship and starting my own company, but instead of that, I kind of took this leap to go work at GE, and it was a phenomenal experience. I was able to kind of travel the world, work in every different GE business unit, and go through their leadership programs to ultimately, accelerate my career and kind of rise in the ranks. After some time there, working in finance and operations, one of my cousins lived in Silicon Valley, and he said, "You need to come out here. This is the entrepreneurship capital of the world, and it's just an amazing experience, opportunity, and you'll have the ride of a lifetime." And so I kind of took the leap of faith, moved out to Silicon Valley. In my kind of risk-averse mindset, I really de-risked it by going to work at Facebook. And at Facebook, I had a very interesting opportunity where really what I focused on was helping to lead the real estate expansion. We were hiring almost 20,000 people, and we needed a place to put all of these people. And so through that experience, I pretty much opened up offices across the world and were able to staff these offices with Facebook employees. And so I really learned not only about commercial real estate, but then also the second and third order effects of, what it really meant to be able to go into a city or a region and then expand, and what that really means for real estate, as well as job growth and economic opportunity. A short time after that, I decided, I wanted to get into investing. I started looking at tech investing. I started looking at all different types of real estate asset classes, and then ultimately I kind of, made my mark and ventured into multifamily real estate investing.
That's awesome, and I think that's also a great transition. So let's just dive right into what you're doing over at JT Capital. So first, tell us a little bit more about the company, please.
Yeah, so JT Capital is a multifamily real estate investment firm. And what multifamily means is effectively large apartment complexes for purposes of our strategy. What we do is we raise money from individuals. These are people like doctors, lawyers, accountants, software engineers, technology executives, so on and so forth, everyday people that have money that they want to invest in real estate. What we do is me and my partners will go purchase an apartment complex with that money, as well as getting debt from Fannie Mae or Freddie Mac, and we'll go purchase these apartment complexes and then begin to run them. Usually, we hold on to these apartment complexes for somewhere in the range of 3 to 5 years, and during that entire time, we're providing our investors with monthly passive income, what I like to call mailbox money, because, you can just go out to your mailbox at the first of every month and effectively collect your check. And that's from the rent that people are paying, to live on our properties. Then after that 3 to 5 years, as we own the properties, operate them efficiently, and continue to add value, we will sell those properties, usually to a small private equity group or other type of institutional real estate firm that we will then partake in the equity gain from the sale of that property. So it's a really good investment. I look at this multifamily as a very resilient asset class. There are hundreds of millions of people that are renting across the U.S., and it provides us a really good opportunity to, one, create a home and a community for people to live in, and then two, obviously be able to partake in a substantial financial reward from that investment as well.
Could you tell us a little bit more about, what kind of markets that you focus on, whether it's geography, size of investment, whatever your metrics are? Because at the end of this, I'm going to give you an opportunity to leave your website or social media or wherever you want to direct the traffic, so that listeners that are listening and want to follow up and learn more about JT Capital can connect. But I do want to make sure that they also have some context into the kind of deals you like, and just to make sure that you connect with the right types of investors.
Yeah, that's a great question. So we are very niche and focused in our strategy. So the markets that we've pursued have been in Central Florida as well as Texas. Now, recently we've ventured more in towards Texas because I see such great underlying trends in Texas. These are things like job growth, population growth, no state income tax, a very business-friendly environment, a great environment for weather, and then lastly, a landlord-friendly environment. And so all of these kind of factors have led us towards Texas specifically. Now, within Texas, I'm focused on Austin and Dallas, where we have amassed a significant portfolio in the markets that we play in. The deals that we look at are primarily, in the range of 150 units up to 500 units. That's number of units that are at the apartment complex. And then we look specifically for Class B multifamily buildings. Class B is defined as, apartments that have been built anywhere from the 1980s up until the early 2000s. I like those apartment complexes because we're able to do renovations on those apartment complexes and be able to increase rents that people are willing to pay for. We usually target residents that are, working in white-collar jobs, or they are working in tech or healthcare or finance, because people like that are willing to, pay a slight premium to live in these apartment complexes, but at the same time, they're cost conscious. So they're not going to spend money on the luxury buildings. And that provides us with a really good niche to be able to extract value as well as provide value to the residents.
That's awesome. And so what types of investors are typically a good fit to work with JT Capital?
Yeah, typically we're looking for people that, one, have a basic understanding of investing. What are the risks in investing? What are the rewards in investing? They have a basic understanding in what does it mean to kind of invest in real estate. And then lastly, they have proper diversification. So what I mean by that is they are invested in multiple areas. We never want to be the one asset that people are only investing in, because we believe in proper diversification. We believe in multiple sources of income, and we believe that people should have a broad understanding and investment portfolio as they're allocating their funds. Generally speaking, the kind of minimum check size that, we take into our investments is $100,000. We have a large base of investors that have been repeat investors with us that are now investing, in the millions of dollars. And then for first-time investors, sometimes we will allow smaller check sizes just so they become comfortable with us. the way we kind of work with investors, or potential investors rather, is, people will reach out to us. We'll have a few conversations with them to understand some of those things that I talked about, like what is their background, what do they understand about investing, do they have proper diversification, as well as a large enough kind of asset base that they're invested in. And then at that point, if they're kind of checking the boxes on those three things, as well as making sure our values are aligned and we care about the same things, then we will invite them into our group to be a potential investor with us. But we always encourage people to reach out to us, because even if the fit isn't right, we believe that still we have the opportunity to provide, good education to people, because a lot of the factors in real estate, and quite frankly in personal finance in general, hasn't really been taught in standardized education or schools or colleges. And so when I'm able to talk to a potential investor who may not even invest with us, I find that to be a really rewarding opportunity, because I'm effectively being able to teach people all about personal finance and kind of the beauty of investing.
So Rohan, if somebody is listening to this and they do want more information on JT Capital, what's the best way for them to reach out and to connect with you and your team?
Yeah, so the best way would be to go to our website, www.jtcapitalgroup.com. On there, you'll be able to see kind of our background, our strategy. If you click on one of the buttons, such as Invest Now or Learn More, you'll be directed to our newsletter. And so you'll be able to see some of our insights and then schedule a call with us if you'd like to learn more. The other way, if you'd like to connect with me directly, is just on Twitter. And my handle is @Rohun Jauhar. And I like to be very active on Twitter and, just engage with people. I find it to be a great intellectual community where you can share ideas and bounce things off of each other.
Fantastic. Well, Rohan, really appreciate you coming on the show today and sharing more about your background and all the great work that you're doing over at JT Capital. And to the audience, as always, thank you for tuning in. Hope you got a lot of value out of this. If you did, don't forget to subscribe to the podcast, leave me a review on the Apple iTunes Store. And if you're watching this on our YouTube channel, Mission Matters Money, definitely give us a subscribe there, but also leave us some comments in the video. Love to know what kind of projects and things that you're working on. And Rohan, thanks again for coming on the show.
Thanks so much. Good to talk to you, Adam.